London used to be the largest financial center of the European Union, and everybody liked it. Today, London is the largest financial center of the United Kingdom, with global ambitions that are in the making.
Euronext boss Stephane Boujnah, they're reflecting on how he no longer sees London as Europe's financial centre.
Yes, exactly. And the boss of the Paris Exchange, also Amsterdam, Dublin. I mean, I guess he would say that perhaps from his side of the channel. But this is a story we've been looking at a lot, haven't we, Francine? This slipping of London's status as the share capital of Europe.
Yeah, and by number of course, transactions, so number of shares, London's still the highest.
Right,
so it's a good debate to have.
Clinging on, right? But,
and thriving.
But the trend is clear, isn't it? I mean, I think, and we'll hear it from Stephane, right? And I think when it comes to the companies that are doing well, the share listings that are being attracted to the continent, London's not looking so great.
I'm Francine Lacqua.
And I'm David Merritt.
And this is In the City, Bloomberg's podcast connecting you to the stories and the voices at the heart of the City of London.
So this week, we're going to have some more reflections on London's future as a financial powerhouse post-Brexit.
And it's top of mind this week as we expect to hear from City Minister Andrew Griffith on the government's packages to boost the UK's financial services industry.
And we'll also be bringing in our favourite finance editor and head of City of London coverage, Bloomberg's very own Tom Metcalf, to discuss.
But first, more from our conversation with the Euronext chief executive, Stephane Boujnah.
The story that really caught fire in London the last few weeks was this startling fact of the French stock market outpacing Britain's in terms of market capitalisation. That chart crossing, it really caught people's attention here. How does that feel for you sitting in your role running Euronext now, watching the markets in the European Union overtake London? Do you see that trend continuing? How does that feel?
Let me put that fact in perspective. What this fact that Bloomberg relayed extensively is three things. Number one, yes, this is the indication of the impact of Brexit. Companies that would have remained listed in London have left London, like Ryanair that moved to Euronext Dublin. Companies that would have moved to London to be listed there, like Universal Music Group from the US decided to list at Euronext Amsterdam, or all funds from Spain and London decided to be listed in Euronext Amsterdam. Brexit has consequences. The second thing that this information tells is that the aggregate market capitalizations of the blue chip companies listed in Paris has significantly increased over the past few years because of their global footprint and their global successes in energy,
the luxury brands,
in luxury, in the construction materials, in banking, etc. The third thing that this information tells is that in parallel to Brexit, an alternative platform was created within the European continent. And I want to insist on that. The relevant metric is not the aggregate market capitalization of the companies listed in Paris, because Paris is just one of the gateways to get access to the markets where European companies are traded. And the trading volumes in the single liquidity pool of the European markets of Euronext, of the single order book of the European markets of Euronext, is about 12 to 13 billion per day, which compares to 6 to 7 billion per day in London. So what is important is to compare the trading markets, not the listing venue.
Following Brexit, do you think Paris is undeniably a more attractive place to have a share listing than London?
I think so. Like other places in Europe, like Amsterdam, for example, which has attracted even more international listings than Paris. But I think so. Anyone who wants to list in Europe must list in a European venue, which is integrated, which is the Euronext market. And one of the access way to this European market is Paris.
So spinning it out just from the stock market, then, I know that is your specific role, of course, of Euronext, but London's lost its crown in terms of market caps of Paris, and the shared trading volumes also added together in Europe are beating London, and the new listings. London still dominates in areas including foreign exchange, but do you see some of these things eroding as well? I mean, I guess what I'm getting at is that ultimate prize of being Europe's financial capital. Do you see London and the city ultimately under threat?
I don't know. What I do know is that the closer you get to corporates and real economy, the more complicated it is. The closer you get to global markets, the easier it is for a global platform. London used to be the largest financial center of the European Union for every asset class. Now, London is the largest financial center of the United Kingdom and a financial center with global ambitions. You can implement global ambitions in asset classes like Forex, for sure. And I don't know what is going to be the future. The missing part in the answer to your question is what is going to be the equilibrium of the regulatory debate in the UK? How fast the divergence with the existing regulatory environment will happen? Does Global Britain mean a fundamental divergence with the way financial markets are regulated in the European Union or not? And unless you do know the answer to that question, it's very difficult to foresee anything.
Yeah, but the regulations remain aligned, right, Stephane? I think as things stand, it's really not the regulations, it's the politics, isn't it? Because the European Union has made a decision to not grant equivalence to London on the same status as it could have done, as it does with the United States. On the British side, I think they've asked for equivalence whilst regulations remain aligned and it's not been given. So what's the incentive for London to stay aligned? I mean, I think, if Brussels wants to punish the London market for Brexit, it's doing that already, is it not? And I think, therefore, people in the city might argue the only option is to deregulate. We've got to take some sort of advantages from Brexit. And that's because of the political decision in Brussels, isn't it?
I disagree. I don't think these are the terms of the debates. I mean, my point is that the UK can decide to go whatever they want. I mean, the UK has decided to leave the European Union, not the other way around. A decision has been taken, which is a sort of meta-fragmentation decision. And fundamentally, you can't have the cake and eat it. You can decide to be outside the regulatory framework and continue to have the same access. There is no question of punishing or anything else. It's either you are in or you are out, and that's the only thing that happens. So my point is that I heavily respect Brexit, and we all have to respect Brexit, but we don't have to bear it, and that's exactly the point.
But Stephane and David and I have been talking about this in a number of podcasts, is that actually maybe the timing is not on the government side, it's not on the regulator side. At the time, they were thinking of a Singapore on Thames, which also has concerns, but it's something that the UK could implement longer term if there wasn't all of these headwinds coming from abroad. But if we just also change tack a little bit, when you were a junior banker in London, you saw, I guess, the might and power of the City of London. Do you think that will change because of Brexit and the need of passports from EU citizens to come to London?
Fundamentally believe that the most damaging consequences and the most lasting the risk or consequence is related to the restrictions on the movement of people. And when it comes to finance, it's clear that when you need now a passport and not anymore just an ID to get into the UK, when you need a work permit to do your internship or to get your first job in London, we all observe that there is a sort of drying up of an evaporation of this, what used to be a sort of regular flows of thousands, maybe tens of thousands of young Europeans coming after graduation to get their first job in London, in finance, in law, in accounting, in private equity. This is diminishing massively. So after 5 or 10 years of quasi professional generations of people like not doing their internships, their first jobs in London, there will be some fundamental change in mutual understanding. And I find that extremely sad because when I was young and slim, I used to work for a large international bank in London, and I had to do my FSA test. I studied extensively all the details of the trading of UK guilds and stock exchange settlement rules, all these things that are fascinating. But I became part of the UK-minded financial community.
And that is now dying out, do you think? I mean, where are the young, up-and-coming generation in Paris now going? Or are they staying put to learn their trade right where they are?
That's a very interesting question. We are in a situation where we have distributed, integrated, interconnected financial centers in Amsterdam, Paris, Milan, where people go and get training in international banks. I mean, the way the large international banks have settled massive operations now in Paris, Amsterdam, etc., and offering exactly the same type of internship as they were offering in the previous days in London is a new reality.
But Stephane, certainly that is just a transition period, right? Maybe things will change. I mean, I don't believe that a Barclays or a Credit Suisse or any other investment bank won't want, bright young minds coming to London. I mean, you have visa, you can come here as a student.
Again, I don't know whether it's transition or not. It's you put me in a very complicated situation because I'm a citizen of the European Union. I'm not a citizen of the UK, so I can't comment. I heavily respect the vibrant British democracy. I'm trying to read what's going on. I'm sharing with you my intuition that above and beyond what is published on web pages and so on about the day-to-day developments of financial markets, I believe that on the long run, when circulation of people is more complicated, when you need to inject more energy to go somewhere, when it's not anymore the natural, obvious place to go, this will have more lasting consequences than anything else. And that's what I just want to highlight. And in my view, it's unfortunate.
Is it changing Paris as well? Just some of the, we've seen the stories about the jobs being created in finance in Paris, the market's growing, the talent that's staying there. Is it changing the fabric of the city and the dynamic? Is Paris becoming more of a buzzing financial capital than it used to be?
Difficult to say. I think it is starting to do so, but my feeling is that the driver of expansion of financial teams in Paris will be international US banks because they move quickly, and when they move big. What I find very interesting is that they started with a few tens and a few hundred people, and now they are hiring thousands of people, and they are renting not floors but buildings to expand their operations here. So I think it's going to start having an impact in the price of restaurants and the price of real estate.
Yeah, when you look at equity market volatility in 2023, are you expecting it to be as, I guess, violent or interesting as it was in 2022? And does that just give business, how much more business will Euronext have because of that?
I think equity will be back. Because every company now that the cost of debt is increasing has to revisit very seriously balance sheet. Balance sheet is back in the map. There was a time where debt was not an issue. Debt is getting more expensive. Therefore, the balance between own funds and equities and debt financing is back in the map. And I believe that will create more opportunities for capital increases, for IPOs. Also, some players who were looking for liquidity through M&A are realizing that the number of buyers through M&A is less large than it used to be because access to debt financing for acquisition is less available than it used to be. Therefore, I'm absolutely convinced, both for raising equity and also for liquidity purpose, stock exchanges and equity markets will become more relevant than they have been in the recent years.
So you're pretty bullish on next year then, right? Pretty bleak economic news around the world, but it sounds like you feel next year could be a great year for share sales on Euronext.
Absolutely.
Stephane, thank you so much. Stephane Boujnah there, the Euronext Chief Executive.
Thank you.
And we're now joined by Tom Metcalf, who runs all of our finance coverage here in London. Hi, Tom.
Hi, Tom.
Hello.
Hello. Welcome back.
Dave, we had this conversation with the Euronext chief executive. I thought it was quite heartfelt. I mean, he
seemed quite depressed about, well, not about his own job, because obviously things are going well there, but about Britain. There was a sort of lament for the lost generation, Tom, of people who hadn't, the aspiring youth of Europe who are no longer coming and cutting their teeth in the city.
Yeah, he was kind of reminiscing about when he was a young banker in London, probably in the 90s or 80s, and where he mentioned several times that he understood the gilt market, right, and how because of Brexit, less students, less junior bankers will come here.
Yeah, absolutely. And that is, a big part of it is the people story almost, the fact that, over a few decades, really, London was the place where a lot of the sort of young talent in finance would inevitably come.
Do you think that's really changed, though? I mean, I feel like the streets are still teeming with people coming from all around. And the immigration numbers we've just seen, right, are a record net migration, 500,000 people around it. They might not be as many balanced towards the European Union, but they're still flocking here from around the world, aren't they?
Yeah, I think it's that. It's not as now tilted as it was to the EU, because it was obviously so easy for banks and firms to move for folk from the continent here. But instead, you are seeing, being replaced by people coming from, all over the world. Brazil, America, of course, as always, and Asia. So, I think London's still got that kind of melting pot thing, which makes it so special. But it's understandable why someone like Stephane might be lamenting.
And maybe it is harder because you used to be able to come with an identity card, right, that the French, the Italians, the Germans have, and now you have to get a passport. But I have anecdotally so many friends and family that want to come here and learn English. So what does it mean for the City of London, Tom? Do they still, do the BlackRocks and asset managers still want those European junior bankers?
Yeah, I think so. I think the most compelling data point I've seen is before Brexit, you had about 84% of Europe's fixed income traders in the city, and that has dropped, but only to 78%. So London is still this gigantic beast, still, one of the great financial centres. I don't think there's any risk of that. When you do speak to those CEOs, it's not like they're like, we're pulling out of London. It's more like, well, we do have other options, and perhaps on the margins or at some levels we'll.
Because they can see, there's just it's an admin problem, isn't it? I mean, you've got to apply for a visa, but Britain is granting lots of visas for these. It's not like the shutters have come down completely. There's just it's like anyone from here who wants to go and do an internship in New York, right? You've just got to jump through some hoops to do it rather than get on the train.
Yeah, so I think in individual cases, it might be tougher for people from the continent, but it's not like it's become impossible. It's more, if your company's backing you, it's still definitely feasible. So that's why, difficult to tell during COVID, but certainly we were walking around now. I was actually going around the city trying to book a place for some Christmas drinks, and there is
impossible, right?
It's impossible.
Everywhere is full.
I'm a December baby. It's impossible. I always have to celebrate
no birthday.
My birthday in January. It's okay. I still go big, but it's always in January. Tom, when you look at, and Tom saves me on TV because he comes on and we always talk about bonuses and the fact that the big banks, not only European ones, but the global Wall Street ones with a footprint in London are cutting bonuses. How worried are they about 2023?
Yeah, I think the mood is darkening. So this week we had a lot of the big name CEOs effectively coming out and saying, hey, kind of downsize your expectations, bankers.
We had Goldman yesterday, right? Bloomberg exclusive,
exactly.
telling
Solomon
Bloomberg Television, that it's going to be a rough year.
If you're running a big financial services firm, I think you have to assume that we have some bumpy times ahead. We could see a recession in 2023 also, and so I think you've got to be cautious and prepare.
No, exactly. So you had Solomon, you also had the Bank of America giving a slightly more nuanced approach, and then of course the news that Morgan Stanley is cutting globally 1,600 workers. So I think that just gives a sense of, finance, even during the pandemic, was booming. I mean, we'll put that Morgan Stanley cut in context. They're cutting 1,600. They went from 60,000 to 80,000 over the past couple of years. So this is all coming from a huge expansion position of strength, but the sentiment has changed. And, it's interesting. We've spent the last couple of years talking about, this sort of battle for talent. Now it is, at least, expect the executive to say this is, what? We think the shoe's on the other foot. We can be a bit more selective. We don't need to, we can clamp down a bit on sort of less favoured, so we say, behaviours like working from home.
Less favored behaviors like working from home. I had the scathing interview actually with Nouriel Roubini, who was saying he loves London. He sees the potential for the City of London not changing that much, but he also said it's completely far-fetched that the UK at this moment in time can deviate for regulation with the EU.
I think the idea that you're going to cut regulations is totally far-fetched. If you want to have access, even with a free trade area, let alone a customs union to the European market, you need to maintain the same regulation.
Is that true?
Yeah, and I think that's the kind of the reality that's set in for the UK government. So we heard, a couple of months ago, there's going to be this big bang. We'll see this big Brexit dividend. Instead, what we're expecting on Friday is, I think, what's now being described as the Edinburgh reforms, where...
I love that. That's brilliantly sort of nondescript.
Yeah, there's a lot packed in there. There's a couple of things. One, it's not big bang because I think they've realised they're going to get so much opposition to this. From anyone kind of from mainstream finance, no one is saying burn down these regulations. So there's going to be limited sort of...
I mean, they were designed largely by
Exactly.
Britain anyway, right? So it wasn't like the square mile was ignored throughout this.
No, that's the irony. Is It's not like we were kind of leading the EU in terms of financial regulation. And now what the EU is doing is actually reversing some regulation that the City of London was keen for, MiFID II. So it's
so we'll learn this week what exactly those are. I mean, we talked in the podcast, just in recent weeks about this, about what might come, and there was this feeling that maybe the big bang was going to be a bit of a little whimper. Now it's the Edinburgh.
Yeah, the Edinburgh reforms. Yeah,
right,
I think more of a whimper is it's certainly the sense we're getting. Maybe they'll pull a rabbit out of the hat on Friday, but right now it's a lot of stuff which, frankly, A, could have been done with or without Brexit, and B, it's not going to put the City of London on a completely different path.
And yet, the European side, I mean, we just heard Francine and I just been talking to the CEO of Euronext. I mean, he kept coming back to this point, that it's all about the regulatory divergence. It's up to the UK. If they decide to diverge a lot from the EU, they can expect more business, more financial services to have to flow back to the European Union. So, I mean, it is important, isn't it? Like how much the rules are going to differ.
No, absolutely. And so you had Andrew Griffith, the City Minister, coming out and saying this is not divergence for divergence sake. So it's going to be very selective. And, I find it interesting someone on the EU side is saying that, because that's the whole point, is if the UK had drastically diverged, I think, it's much clearer why, for example, the EU wouldn't allow clearing, which is a big sort of body of business. Instead, basically, the EU, from as soon as Britain left, where the rules were identical, of course, because none of the rules had changed, did not basically give kind of equivalence on any part of financial services apart from clearing, and is cutting clearing from 2025. So I think there's a big political angle to this.
Political, but also when you look at clearing, and please, listeners, stay with us, because Tom will explain what clearing is.
We have to define it.
There's a problem also of fragmentation, that actually if you don't keep in London, then clearing, you just don't have enough pool of liquidity, because it's going to be here, a little bit there, and so you don't have that kind of mass of funds that you need. It's
a volume game. So best way to describe clearing is, I suppose, lots of different trades going on between different people, and effectively to make sure those trades go through, you need to put some portion of the value of the trade with a central clearing party. So if everything goes wrong, there's some way you can reclaim the money. And the reason it's more efficient to do it in one space is because, let's say a bank does who knows, thousands of trades a day, it can of course offset comparable trades from each other. So if everything's doing it in one venue, which used to be LCH, which is part of the London Stock Exchange, then hey, that was hyper efficient. What's happening now is, you might need to do some trades in the EU, some in London, and you cannot offset those. So your costs go up. And guess what happens? Most people decide, well, let's move to New York, where, it's back. It's a bit like London was.
Is it about trust? Because if you trust the other party, then, what's the point in giving business to New York? Would they rather give it to New York than have it in London, which is still a closer partner?
Yeah, it's and that's why I go back to the political thing, because there's no real sense to it. If they're comfortable doing these kind of trades with New York, then why wouldn't they allow them to do in London? So I think that's probably the big question for me is, do these regulations, are they kind of, globally applicable, or is it just to London? So that would be very interesting to see how that shakes out. And with all this stuff, the time frame is till 2025. So we've got to sit around here, opining, wondering, and see what happens.
I mean, I asked Stephane about the stock market, obviously with Paris overtaking. We've all talked about this a lot in the last few weeks. The market cap in Paris overtaking London for the first time, and whether or not we're going to see the same in other markets. Obviously the dominance of London in Forex. We've just talked about clearing. Does the stock market matter that much? I mean, the bigger volumes are in places like foreign exchange. Where do you see the trends there going in terms of London versus the financial capitals in the EU?
Yeah, well, to your first question, does the stock exchange matter? Not on sort of money coming in, etc., but from a symbolic point of view, it really does. And it does have some impact. And I think, whereas London used to just dominate European equity markets, now there's a lot in Amsterdam, there's a lot in Paris and Milan. And, Euronext has got exchanges in all those places. And I think it will just be this sort of drip effect of there's a little bit more in Europe, so we should put more traders there, or should do more IPOs there, as you've seen with Amsterdam. But then on the FX thing, that is a very different beast. So that is critical business. That is one of the big reasons why London is the world's international financial centre, and its lead there is huge. So
you don't see that being chipped away.
I mean,
and there's nothing really the EU can do about that, right? There's nothing.
It's really not clear, because a bit like with the clearing thing, everyone wants to be in one big liquid place. And so, it does feel to me like a duopoly between New York and London. It will change, but on the margins, and probably those trader numbers is a good guide. London was 84%, now 78%. It's going to be that kind of shift, I think, at least in the near future.
Thank you, Tom.
Thanks for listening to this week's In the City. We'll be back next week.
But in the meantime, if you like our show, please head on over to Apple Podcasts or wherever you listen to podcasts and rate, review and subscribe.
This episode was hosted by me, Francine Lacqua.
And me, David Merritt.
It was produced by Summer Sadi.
Editing and sound design by Blake Maples.
Special thanks to Stephane Boujnah, Carolyn Conan and Tom Metcalf.